What's going on, guys? How are you all doing? Good morning. Hope everyone's having a lovely Sunday morning. Give me 2 seconds whilst I just set everything up. Okay, so can you guys tell me if my picture is okay and my sound is okay as well? All good? What's up, Lath? This guy, nice to see you. Glad you finally managed to catch one of these. Okay, so where to start? BTC. Let's do some BTC analysis. Okay, so start on the daily here. Right, actually we can go a little bit higher because we're still talking about this pocket of intra-demand on the weekly. Okay, so we've been speaking about this pocket of weekly intra-demand for some time here. Okay, give me 1 sec. I just want to actually quieten my computer for Angelo, you good? Nice to see you at church. The right church. Real Sunday morning church. Okay, cool. So yeah, pocket of weekly intra-demand on BTC we're still interacting with. Okay, so we're still tapping into this demand zone here, and yet to see if we get any real significant play out from this tap yet. Okay, so in 14 hours we have the weekly close, which will be nice if we do so in this area, because we would have tapped into the zone, closed above, out of the zone, and although we have technically closed into the zone last week, which is not what we want to see when talking about supply or demand zones, we have also come down to this area on the RSI. Okay, so we have a nice weekly reset in play, and that's the general higher time frame picture and consensus. Okay, so going down to the daily, we can see that we just have that interaction here, and really on the daily down to the 4 hour, etc., we're talking about reclaiming the sort of 112s here. Okay, so this level in here, like so, is a level of great importance. Okay, so we keep sort of dancing around this level, right, sort of teasing the reclaim here, and then just failing back underneath. Now this sort of price action that we're seeing in here, well, this is sort of dreary into the weekend and then weekend price action, right? So no surprises that we've been sort of fucking around down here doing absolutely squat all. That's fine, and this sort of dancing around in this area also fine. We're still holding into the weekly demand zone, as you can see here, but now it is just a case of reclaiming the 112s and moving up with some semblance of significance, like so. Okay, rainy day BTC. Yeah, it's actually very grey and cloudy. You're also in Portugal, aren't you? If I remember correctly. Yeah, first grey day this year, I think. Sorry to anyone listening from the UK. Long above 113s. Perhaps if that's a system, a trigger in your system, sorry, then maybe. right? Something like this, but potentially, if that's what you're looking at, right? Maybe this SR reclaim is something that you could work with. For me, no, it won't be. For me, my triggers normally, systematically speaking, in terms of left side price action, i.e. what's occurring into the left side of the chart, I like operating in areas that are either supply or demand based or sweep SFP based, right? So I like taking trades, longs into demand, shorts into supply, etc., etc. SR levels I don't really use for trade triggers too much, unless we're looking at breakout trades or deviations with lots of complements. So let's take a look at the deltas. So BTC delta, not too much noteworthy, right? As you can see, we are skewed to the negative side, right? So across this page, dating back to the 12th of last month, give or take, we are skewed to the negative side. Basically what this means as we've tapped down into the weekly intra-demand zone, we've had these spikes and some clusters of negative delta. If you don't know what negative delta represents, it's indicative of market selling occurring into limit bids, okay? So as we come down into this pocket of intra-demand, right, which is our first sort of buffer zone in this area, the first point of price where we expect it to potentially hold up on the higher time frames, as this sort of market selling occurs into this zone, right, the negative delta and spikes of delta show us that there is something in the way of bids in this area, okay, like so. So if you visualize sellers taking place, market sellers, which we normally consider to be the weaker participants in the market, because all retail, all newbie traders, etc., etc., even yourself and myself, we're still very small fish in the game, okay? And we operate normally in market form, trying to get in and out of position, not worrying too much about slippage, etc. So we are these smaller, small fry, small fish in the markets. As we, giving an example, talking about ourselves, press market sell into this zone, it's soaked up and absorbed by larger institutional organizations that operate in the form of limit bids, simply because they cannot operate in market order, right? They can't operate in market order because their size is too great. If they were to operate in market order, they would completely skew the books. They would eat terrible prices, and they would come out at a very disadvantageous position, okay? So the stronger hand in the market always operates in limit form, and this is exactly what we want to be seeing, is these sort of pockets of negative delta occurring as we move into this demand zone here, okay? So not much to comment on BTC apart from really just dancing around the 112s here, looking for the reclaim, taps into the weekly demand zone. On the Ethereum side of things, slightly more to talk about, okay? Price-wise, right? Nothing, okay? This is very lackluster at the moment. It's just Crab City over here, okay? So we're just completely bracketing range bound, and we have been since, give or take, 29th of August in this area, sort of dancing around this level here. Haven't taken out these stack lows here. You can see we have double stack lows here. Every time I think price is going to come down and nuke, wipe these out. As you can see here, we basically front run it by a tick, come back up, continue bracketing in this area. What we do have, which is particularly noteworthy, is the deltas, okay? So I pull across the ETH delta here. you can see that we have this spike of negative delta here that was put in 2 days ago, right? And I put a tweet out about this spike of negative delta and its significance. The reason being is because we're looking at the hourly delta chart, aggregated delta on Ethereum, which is my default. What I'm looking at always on BTC and ETH is the hourly. Now, if you scroll out and zoom out on this chart, okay, keep zooming out, you can see the significance already, right? So just how severe, right, this spike of negative delta is, and its relative size relative to all the negative delta on this page, okay? So we're already going back to June. You can see that it's already the largest spike, okay? Now, if we keep scrolling, no more data. All right, so we've maxed out the look back period on this template, and we're now back to 10th of Feb, my birthday. And you can see that it is the largest spike of negative delta in this entire look back period, pretty much throughout 2025, okay, by January. So again, going back to what delta is and the significance of delta, okay, what does this mean? It means that the market order participants are selling, right? They have been selling, and they sold to such a great degree into such severe limit bids that we produced this negative delta, and that speaks for the absorption that's taken place, okay? So in other words, there was some panic, there was some emotion in the market, whereby the smaller market participants were hitting sell, right? So they were dumping ETH, but there was a larger, or there were larger, plural, participants in the market, institutions, organizations. I don't like to speculate on who these participants are in particular. I find it serves no value and can lead you down a troublesome rabbit hole. But the data has been presented that there has been large absorption that's taken place in the way of limit bids soaking up these market selling orders and holding up, or in other words, propping Ethereum in this area to an incredibly significant degree. Okay, so when you see signals like this, they are not to be trifled with. Okay, these are very serious signals in the markets. The reason being is because, firstly, of the rarity, right? You can see that within basically the whole of the 2025 look back period here, we haven't had anything to this degree, okay, in terms of negative delta. But the other reason it's so significant is because it is pro-trend, okay? We are in context and in line with the trend here. And when I talk about pro-trend delta, right, I'm normally, my normal guidelines are magnify it 2 to 3 times the size of counter-trend delta, okay? So if we look at positive delta here, and this is counter-trend because it's against the trend, imagine basically scaling this isolated spike on the histogram out by a factor of 2 or 3 times, and you're basically going to come down here and start basically interfering with the printing of the liquidations. Okay, that's how big this spike would be. The reason that I administer this approach is because of the importance of pro-trend delta, okay, and how much it basically has an effect on the charts and the play out of the markets. Okay, so very, very interesting to note on ETH, and I do expect to see a significant move up from here on Ethereum. Using this sort of the delta and the negative delta to hone in on an exact trigger and entry is tricky, right? In my book, I have an exception. That's not to say I'm in a position, but I have an exception that says if you see an isolated delta spike, which is of great significance, right? Very abnormal. Okay, so like once every 6 months and once every 12 months, that sort of cadence, then in that regard, you can take it as a sort of isolated trigger, okay, without any other necessary confluence. Okay, so you can take this in of itself if you want to without any other confluence. Now over to the alts. Give me 1 sec, guys. I'm just gonna nip to the toilet and then we're gonna scan some alts. Okay, so over to the altcoins. We can do a scan of our weekly strength watch list, see if there's anything of note, okay? BCH, incredibly strong. Very, very strong market indeed. Still nothing really in the way of a trigger. Okay, it's just been a grind up here. Nothing in the way of demand, no swept lows. BNB. Broken out of a meme triangle here. And just raging onwards. Super strong market. BTC, as we know. B just front run this market structure defense zone or origin demand pocket here, which is a shame. Unfortunately, as you can see, alert got front run, no trigger. Now, whilst I'm running through these, if you guys have any questions for me or any charts you'd like me to look at, please let me know. So just going back to ETH on the 12-hour here, right? Spoke about this in the last live stream. This is exactly what we want to be seeing, okay? So aside from the spike of negative delta, we are considerably consolidating in this area, okay? So all of this that I was talking about here is great, okay? We love to see this. The reason being is because we've already taken out all-time highs here, 4895s, okay? We did so with quite a lot of relative speed. Okay, so if you look at the weekly, this is just one large move up on ETH. Okay. Now, what we want to see in this area is some sort of cool off. Okay, we don't want to see a rejection, of course, off the back of this SFP or sweep with speed into all-time highs. Okay. But we do want to see some sort of consolidation in this area. Okay, so to get that weekly RSI to come down from the overextended region here past the 70s, closer down to that 50 level, And if we go down to the 3-day, we can already see that it's starting to come down and cool off, which is great. Down to the daily, perfect. Okay, so this is really, really nice. Exactly what we want to see for ETH bulls and general crypto bulls. Okay, this consolidation, this cooling off on ETH, so we can then re-attack all-time highs and do so with more efficiency. Altcoin coming down, interacting with this independent low down here. At the moment, there is quite little in the way of triggers. Okay, as you can see, we're starting to get a semblance of a divergence on the awesome oscillator here. So price may come down here, make a final leg down. We get that push, perhaps. Something like this, maybe, right? Take out this low here and push away, right? So this would be a what I call an LSOH, right? Local sweep of historic. So this is the historic point here. This is the first sweep that takes place, and this is the second sweep. Okay, so you're sweeping the local point of a historic point. Another way to think about it is a sweep of a sweep. All right, so that may be on the cards for Altcoin. If not, then we may always hold at this level here. This may be one of those points in which we just come down to test the liquidity at that sweep level, like so, and then move up. All right, those are the two bullish scenarios in my head. This guy, I'm short 4888 and 4488, waiting for a sweep of the lows, so that delta spike is interesting. ETH BTC needs time to set a higher low too. Yeah. Well, good luck fading that spike, is what I'll say. As always, you know, the delta can be wrong, but it's not something I'd like to position against. Right, H-bar, we've been looking at this pocket of 12-hour demand. I believe it looks clean on the 6 as well. Yeah, super nice on the 6 hour. Okay, so this is a very, very clean pocket of intra-demand. Impulse, cluster, impulse, and then what normally happens is we get this sort of range-bound bracketing price action above the zone, come down to test it. And you guys may be familiar with the sort of PO3 style plays, right, where we do something like this. Have any of you guys seen something like this before on Twitter? So we have the range, we have what's called the manipulation, and then the expansion, okay? So, although I would love to see us tap into this demand zone here, I truly would, right? That would be the best trigger we can get, and the best confluence in terms of left side price action would be a strong and affirmative tap into this demand zone here. I'm also open to the idea that we may front run it. Okay, we may front run it, not give that trigger per se, and we're looking at something more like this. Okay, so deviate, reclaim, lock in that deviation, like so. And reclaim all the levels. Okay, so you can see I have 3 lines here for 3 different levels. So I want to see this being reclaimed up here. Okay, this final level here. Just so we can have no sort of subjectivity in our analysis, no subjectivity in the markets. That's an objective reclaim. All right, so you've reclaimed all the potential levels here, locked in the deviation. And at that point, we may be looking at a play like so. Now, stop loss wise, right, you can play this 2 ways, 3 ways in fact, okay? Let's say we have a retest, a nice close here on the 6 hour, 4 hour. both of those are acceptable, of course, the 12 hours as well. Okay. Now the first stop loss placement could be here at the low of the deviation. Let's say like so. Right, line that up. The second would be give it a bit more room in case we sweep those lows, like so. Okay, so just in case we come back down for some sort of fuckery in this area and take out these lows, right? Knowing that the majority of people are going to place their stop in scenario one, where we just ran through at the lows down here. So, right, so it's taking out all of those market participants that wanted to try and risk it with slightly higher R and squeeze out more juice from the trade. Okay. The third and most responsible stop loss placement would of course be down here. Okay. And of course, this is only worthwhile if you are looking at a target which is in this sort of area or higher. Okay, but that is the most responsible stop loss placement. Now, I just want to have a word with you guys about stop loss placements as well. Okay, so I've been putting out a lot of content recently on reducing size and widening your stops. Okay. Now my general message is that most of you guys, and from most of the the posts and the taken trades I can see from my group members, there's a ongoing issue with taking trades with too much size and too tight a stop. Okay. Now, unless you have a raging P&L and profit factor and you're doing incredibly well and you're killing the markets, one of your main issues is probably having too tight a stop. Okay. So although this may seem outrageous, it may seem far-fetched, it may seem like you're prolonging basically your journey as a trader in terms of getting to profitability and getting to trading success, because okay, fine, if I win this trade, we lock in here, we deviate, I take that entry, then even if the trade goes to plan, it has to go all the way up here to give me a 3.6R or whatever it is. I'm not going to build my account quickly, right? I'm not going to start making cash, great cash, and start growing that account to a great degree. But that being said, you will survive the position. Okay, so basically the mindset that I want you guys to get yourself in as much as possible is stop chasing the high R's, stop chasing the imaginary dollar signs in your mind. Instead, focus on survival, right? So the message I put across was first survive, then thrive, okay? And I want that to be a bit of a mantra to you all, okay? So first survive, then thrive, right? Because most of you guys, or from most of the sort of aspiring traders that I see that are earlier on in their journey, even the notion of taking scenario A up here is sort of, people don't even want to do that. Okay, so you're looking at this sort of reclaim candle here. Some people are coming in with stuff like this, and saying that, okay, cool, well, I'm giving it a bit of a buffer underneath this SR reclaim here, right? That's not a buffer, guys. That's not enough. You need to really, really give the space, the trade, the space and room it needs to breathe. And it should, the beginning of positions, right, whether it's single installments or position building, should all be about survival, right? That's what you guys should be focusing on. The beginning and early sort of nascent stages of trade formations are where most of the difficulties come into play in terms of trading psychology. Right. What I mean by that is, let's say, for instance, you've taken scenario 1. Okay. So we've come in, we've deviated, reclaimed, and then we come up, we have a nice spike here, and then this happens. Okay. So this happens here. At this point, you're down 0.7, 0.8 R, okay? And you start chopping around in this area, right? You're underwater on the position. And this sort of thing is incredibly plausible. If you look at this structure right now, comparatively to all of this that's gone on, right, this isn't actually that significant, okay? But what it will feel like in your mind is a million years, okay? You're taking price action spanning a week, 8 days, perhaps, right? And that 8 days will feel like 80 days. I guarantee you, it will feel so painful. It will feel so horrible. Day after day, night after night, if you are overexposed with too much size, this will be an incredibly torturous procedure that takes place. And essentially what's going to happen is something that I refer to as cortisol decay. Okay, so cortisol is the stress hormone, and what will happen is that cortisol will build up in your mind and your body throughout that 7 to 8 day period. And essentially by day 2, you'll already be so stressed out, right, on this position that as soon as this sort of spike happens, your stress is heightened. Okay, so your stress is up here, and then everything from that point onwards is just basically a mental tool, a defense mechanism to take you out of that state of stress. Served us very well in hunter-gatherer times when we had saber-toothed tigers that were going to eat us, but these days it does not serve you well in the markets. Your brain will always try to take you out of that stressful position to protect you. But what this does is, like I say, decays, right? It's this cortisol decay whereby even at this point here, right, where you have no real reason to come out of the trade, okay, there's no real reason to come out of the position. Your trade has still not technically been invalidated, but your brain is telling you to simply get out of this state of stress. So what will happen is there'll be this inner voice, this narrative inside your mind that convinces yourself of all of these bearish narratives, thesis, whatever it is, whether it's macro-based news or something particular to the fundamentals of the market, or some lower time frame technical price action concept that you're looking at and going, okay, cool, we're definitely going to nuke down here. I may as well take the minus 0.5 R hit instead of taking the full 1 R. Whatever that narrative is, right, it will take you out of that state of stressful environment, essentially, okay? Now, I ask you a question. Will you feel more stressed, right, or less stressed if you have more size on that position? Obviously, if you take more size, right, at the beginning of the trade, when you're looking at this sort of deviation reclaim and you're in here, more size seems like a great idea, doesn't it? Because you're going to make more money, okay? You're going to have more of a play out on the trade. You're going to make more money. You're going to build that account faster. Now, when this happens and you start getting fucked around with and the trade goes against you, right, more size is the worst thing in the world. Right? More size just means more loss, more potential loss means more stress. More stress means worse trading psychology and worse trade management. You're not operating in the right frame of mind. You're not even thinking about surviving the trade, really. You're just thinking about how you can feel better yourself. And unfortunately, feeling better yourself usually means cutting the position underwater, okay? Which is the worst thing you can do for your equity curve, the worst thing you can do for your long-term performance, and the worst thing you can do for your P&L, okay? So this notion of taking less size, right, and wider stops, okay? So let's say you haven't taken scenario A, instead you've taken scenario C, right? You're down here, and you've done so with naturally less size because you have a wider stop. This, right, what was a spike down to minus 0.8 R is now a spike down to minus 0.25 R, okay? You've still got minus you've still got 0.75 R, right, in here, okay? So you've still got 3/4 in here of safety room, right, which gives you more comfortability, gives you less stress, and makes it more likely for you to survive the position, okay? Now, let's say this does occur, right, and you've taken scenario C responsibly, sensibly, right, and you haven't been lured in by the initial emotions of greed, high R, imaginary dollar signs, etc. And let's say you've taken scenario C, like I said, and then this happens. Okay, you get a nice spike up here, all right? So at this point, you get a strong, let's say this has a tail wick to the downside as well. and you get a nice full-bodied green candle, okay, on the 6 hour, 4 hour, or whatever you chose your primary time frame to be on this trade, then at that point, maybe you size in again, okay? So at this point, you take another installment here, right? You've taken a second installment, right, after surviving this bleed out, after surviving this chop, and being in your underwater zone, okay? So at this point, perhaps you can do this, right? And you can scale back to scenario A, okay? At that point, what will happen is, let's assume you took 50% here, you've taken another 50% here, all right? Now, you've got an average of here, right? You've taken the stop loss at scenario A underneath the deviation here, and what you've done is you basically survived the initial fuckery of the trade. Okay, so what I've been saying in my group a lot recently, it's been very appropriate to talk about this, is how the markets almost always make you sweat, right? It's very, very rare you get instant playouts on your trades, right? So this notion of survival is incredibly important, okay? Now, whilst everyone else is getting chopped up, right, experiencing that cortisol decay on this deviation trigger, you've now survived it because your initial stop was down here, right? You had that sort of buffer room, that comfortability, that reassurance, right? Now you've tightened up to scenario A at the right time. You've added into your position here, right? And now you can see this take place, right? And it runs, right? So a bit of a rant, okay? But I hope that lands on the right ears. It's something that I imagine will help you all greatly, right? And this sort of notion of position building as well, very, very useful, okay? But something I want you to ask yourself when you're deciding on your size and the position, right? And by the way, you should all be using fixed risk. That's the best way of going about this, right? But when you're deciding on your stop loss placement anyway, ask yourself, just picture this happening, okay? Picture the trade going immediately against you, right? In the worst way possible. And just basically give yourself enough room to survive that, okay? You can always build in, right? And even if you don't build in, right, at least you've survived. At least you've netted a win for the account, and yeah, it's always going to be the best thing to do. So attack all your trades sensibly, responsibly, and please adopt this sort of theory of survive then thrive. Okay, I imagine it's going to serve you, or most of you, quite well in the markets. All right, so a bit of a rant there, guys. I'm just going to respond to some comments. Can you do the useless later? Can you do useless later? Oh, sure. Yeah, I can do useless. I really want it to be bullish, but I don't really like how the chart looks. Okay. Junk bond new high, Fed cut rate. Do you think about the signal? No, I don't think about any of that stuff. I'm not a macro analyst. I'm simply a chartist, right? The charts tell me everything I need to know. Honestly, position size and wide stop loss are so important. If I followed the rules on that, I would have already made it, but it can be really hard to control your emotions. Yeah. So that sort of process of imagining the trade initially just going against you, right? When you're talking about your initial sizing, your initial stop loss placement was something that was very, very helpful for me in my journey, okay? And I would literally sit there and close my eyes, okay, and picture the trade going against me instantly. How do I feel in that moment, right, when it's going against me? Really try and live through, I know it's uncomfortable, but live through that stress, live through the pain, and go through, just spend 5 minutes, 10 minutes, whatever it is, even 2 minutes, just thinking about how you'd feel, right, if it went immediately against you. And I sort of found that psychological exercise, mental exercise, to be very productive in a sort of counter sense to the initial dopamine-driven emotions such as greed, imaginary dollar signs, high art, etc., etc. What's up, Rich Monster? How are you, man? Okay. Right, so bit of a rant there, but I hope that helps. Hype looking strong as always. Okay, so what I'm looking for hype in terms of a trigger here, another tap into this here. And to be honest, really, we've got our 3 taps, right? So 4 breakout trades, I need 3 taps. All I need to see here on hype is consolidation. Right, consolidation on the level, close up above, trigger, because we have tap 1 here, tap 2 here, despite it being wicks only. Then we have some nice bodies here. Right, so we have our 3. This is a sensible and plausible breakout level to action trades around. All we need to see is RSI resets in this area. As you can see, the RSI is looking incredibly healthy at the moment, just peaking above that 50 level in mid. We just need to see some consolidation underneath the breakout level here, and we have a very, very solid higher time frame 12-hour breakout trade on hype, okay, which has been spanning 60 days. Okay, so a very, very sensible and concrete level to actually breakout trade against. We go down to the 4 quickly. Yeah, so we can see that on the 4-hour we couldn't action this trade. Reason being is because we don't have this interaction here. This is now invalidation of this breakout level on the 4-hour because we've come up close past the deviated locked underneath. Okay, so what I often try and do is just scope down to the slightly lower time frames, right, when I'm looking at breakout trades, just to say, okay, cool, we've got a 12-hour breakout trade here, but if this level is still valid on any lower time frame, right, then we can basically tighten up our entry ever so slightly, perhaps by taking an installment on, let's say, 6-hour instead of 12-hour. Unfortunately, doesn't look like we have it here. Really, 10-hour, not as much of a fan of the structure here. As you can see, 12-hour is much cleaner with these bodies interacting exactly with the level here. 6-hour, nothing. 4-hour, nothing. Okay. MNT, super strong market. I believe this is like a weekly breakout level up here. Still walking that, okay. Pendle got alerts set down here at this pocket of origin demand or market structure defense zone. Pengu, it's in the same sort of category for me as H-bar. I went through this with my group on the private stream a couple of days ago. In that most markets have come down, they've taken out the independent final low in this area, and Pengu still hasn't, H-bar still hasn't tapped into that pocket of demand, etc. And I spoke about how these sort of latecomers, right, are quite nice markets to keep an eye on and potentially take triggers on. And the reason being is because if you look at something like XLM, good example, for instance, okay, so we've come down, right? So this independent low here has been taken out, right? And we're basically going through that process here. If we are to reclaim, this is that notion of making the trader sweat, okay? This is, you know, we're basically dancing around, let's say like the plausible, right, long entry looking at the 12-hour here. Let's say traders have done something like this, right? This is the deviation down here. let's say, as I went through scenario A, okay, so stop down here, and the traders are sweating. Okay, the traders are sweating. We're dancing around here in an area where there's not much buffer room, right? There's not much of a safety gap here. Tight stop and higher, right? That's basically what the trader went for in this place. And that trader is now sweating in this area, okay? Whilst this trader is sweating, right, and you have other markets that are doing the same sort of thing, XRP, again, not as bad, right, but still haven't pushed away from that sweep of the final independent low. What we could see is the markets just slightly dribble down, bleed down, and in doing so, right, it's made most of the trades that are on the table in terms of the traders sweat. But Pengu then just comes for that sort of moment just before the market lifts up board wide, and most of those altcoins go on some sort of run. Comes down just to take out this low. Let's say it does so with a lower time frame divergence on the hourly or something of that nature. It gives us a nice trigger. So the notion is that basically some of the latecomer trades can actually be quite nice, right? And one way to look at them is that they're slightly weaker, fine. But when you have this narrative of the market where multiple markets are approaching their final independent lows, pro-trend after ranging and bracketing for some time, they do tend to lift up and move in unison, okay? Obviously dependent on BTC and ETH, right? But they do tend to make their moves to the upside in unison. And yeah, what I found from experience is sometimes catching the ticket on the last trains can be very nice, okay? So still have alerts here on Pengu as I do demand on HBAR. Sol, still super strong in this area, albeit nothing really in the way of a trigger, right? Just looking for this level to be reclaimed, come back up here. As you can see, I've got alerts down here at some triple stacked lows. What I mean by triple stacked lows is that there are lows, 3 lows here, in very close spacing to one another, right? And when you have these sort of stacked lows or stacked highs, they make for plausible areas for stop losses to be built up at, and therefore very nice and attractive areas for sweep triggers. Okay, SPX. Some nice rounding off here on the awesome oscillator 12-hour. Okay, so some good rounding off. Actually got a triple hump structure on the AO. Okay, so 1, 2, 3. Those of you that have studied the way that I use the AO know that a triple hump is a very, very strong sign. Okay, so whether or not we get these lows taken out at the 88's yet to be seen. Sui now nicely reclaiming these levels here. Okay, so in an hour and 40 we'll have the 12-hour close. This would be a nice candle to lock in here. We need to see a bit more of a push because it has been dancing around these lows quite a lot, but even still. Syrup. Okay, so daily trend line here, right? 1, 2, 3 taps. Yeah, one to watch for sure. This sort of structure here reminds me of B early days down here. Okay, so definitely one to keep an eye out for. TRX, like what happened to TRX? I heard there was like some Justin Sun FUD, but Jesus Christ, there's one market I did not see to tank this morning. Definitely not. If there was any market, if you said if there's one market that probably is not going to tank this weekend, then I would have said TRX just because it's been so relentless. But there you go. Flooded us into this pocket of demand here, right? And you can see the reaction. So, again, just a note to people that sometimes discredit or quote unquote don't believe supply and demand. You can see the reactions here in the charts themselves. I don't need to sort of peddle these technical concepts to you. You can see the reactions, right? When you have speed into demand zones, you do get those reactions, right? And these are some of the reasons that I prioritize supply and demand over SR, right? Because you tend to get these sort of reactions and spikes much more so off liquidity zones such as supply and demand than you would do SR. That being said, no trigger hit for me, right? There were no bids in this area in terms of stink bidding TRX, right? I don't really tend to operate in that manner. I do use limit orders to move into positions, but I do so by mean of chasers, right? Which essentially act as sort of market orders just without the fees, okay? XAUT, yeah, raging market. I believe the last stream we were sort of looking at it in this area, potential breakout. I did not take a position, candidly speaking, just because there wasn't enough in the way of confluence for me here. And we were starting to get overstretched on the oscillators. But there you go. It's part of the game, okay? In one respect, or in one instance, that's the safe and responsible approach. In the next respect, as we have here, you're missing out on probably a big runner, but it is what it is, right? I'd rather stay stringent, stay responsible, and adhere to my breakout rules, i.e. good consolidation, good resets on the RSI, and yeah, basically trying to stay in my lane and stay as sensible and responsible as possible. Now, XRP, I've spoken about at length. I put a post out in my group recently and said something along the lines of if you're going to focus on any market, right? And this was when multiple markets were coming down to meet their sort of final destinations in this area, i.e. final independent lows. I said if you're going to focus on one single market, right, and just sort of designate all of your mind share and capital and risk to one market, then it has to be XRP, just because of the context of the market, the context of the trend, the fact that we are stretching down to this final independent low here. And yes, we are seeing that also in Stellar, right? So also very, very nice market, raging market, super strong. Nothing else in the way of any lows that it could reach for over here. This is the final independent low. But Stellar tends to shadow XRP, and that's something that you only know from years of experience in this game, right? It's kind of the laggard, so to speak, to XRP historically speaking. So I'd like to sort of play into the stronger market here. In a historical sense, right, and appreciate that this will probably run much faster and much harder than XLM. Okay, so we had a nice trigger in XRP down here. What was it? Oh yeah, it was this AO divergence here, 4 hour. Okay, so I spoke about this to my group, right? Normally, we'd like to see double divergences, right? And what that means is that we have a divergence across the RSI and we have a divergence across the awesome oscillator. Okay, so something like this. Didn't quite have that, right? Because this first leg of the div here didn't go into overextension. And the second leg of the div did go into overextension, but it's come down lower than the first. Okay, so we don't have that diverging double confirmation across the RSI and the awesome oscillator. That being said, right, in incredibly strong markets, there is discretion that comes into play, right? And I've been speaking a lot about systematization versus discretion. And this is a great example and sort of illustration of those concepts, okay? In that, yes, by my playbook, by my system, by my rules, I need a strong double divergence on the hourly time frame and above to action my trades, generally speaking, okay? If I'm taking a divergence trade, I need that double divergence confirmation across the RSI and the awesome oscillator. That being said, right, the context of this market, we know how strong Ripple's been on the higher time frames. If we go to the weekly, right, raging market here, absolutely raging market, right? So we're playing into the understanding of the higher time frame picture. And if we go back down to the 4, which was the sort of primary time frame in terms of actioning a trigger here, as we've spoken about already, right? A very independent, isolated low. This is the point at which you want to do business, okay? You don't want to be starting to long in this area here when you have this to stretch for. You don't want to be starting to take breakout trades in this area here for whatever narrative you're forcing onto the lower time frames. You want to be waiting for this to be taken out, okay? It's that patience, that discipline, that stringency. I haven't actioned a trade on XRP anywhere in this area, okay? It's waiting for price to come down to take out that low. It's taking the position and dropping that confluence to such a degree where you don't need a double divergence across the RSI and the awesome oscillator, okay? What you do need to do is be in position, right? That's all you need to do. You need to be in position with a sensible stop, right? A stop that will cater for any fuckery. As you can see, there wasn't too much fuckery that occurred, right? We just came down and scratched this low by a pip, right? So not much in the way, okay? But for me, until we see this sort of hourly level here, or 2-hour level, whatever you want to call it, or maybe even it's a 4-hour level now, until we see this sort of reclaimed here, then we're not out of the woods, okay? So we're still dancing underneath this SR level here, and we're not out of the woods on the position. So if you are in position on XRP, I hope you took it with a wide stop, right? I imagine you took this candle here as the entry trigger, but I hope you took a stop which is somewhere in this area here, right? Not coming down, not coming up to the sort of low of the wick in order to survive, right? And then once you start reclaiming levels, okay, and you get more confirmation, more certainty on the position, then it's like the H-bar example that I ran through. You can always take more installments up here and then sort of double into the position. Once most of the traders have been sweated out of their positions, right, experienced that cortisol decay, and you've basically had your survival, mindset going, right? So survive, then thrive, right? I want to keep reiterating that to you guys. Survive, then thrive, right? I want you to say that to yourself whenever you're entering into these positions, okay? It's incredibly important, and yeah, mantras like that are going to help you eradicate your losses and grow your wins. Zora, looking very nice here, right, into origin demand or market structure defense. And as you can see, very, very nice signals across the awesome oscillator as we sort of round out down here, okay? So wouldn't be surprised to see this run, right? If you're taking a long in this area, right, good going, right? This is a sensible area to do so. Again, just make sure you have a responsible stop placement. And this, for me here, I don't need to go down here. I'm not talking about being crazy with your stop loss placements, okay? This already is a very wide demand zone, okay? So we're looking at something like 26%, right? Which is already huge as a swing trader. So this is responsible, okay? And you may be going, what the fuck? I'm not going to place a 26% stop loss, right? I'm just not going to do that. You're cool, all right? You're cool. Like these figures that may seem far-fetched, they may seem preposterous, are really what's going to make you survive these positions, and that's the harsh matter of fact, okay? The sensible stop loss placement on a trade like this is the other side of demand. I don't care what that percentage is. I just don't care, okay? form a new addition to the weekly strength watch list. Okay, so I believe it's 2-hour demand we have here, right, just under 3.4s. Okay, we have a nice pocket here. We also have a pocket here, to be honest, something like so. So got alerts set down here. What I'm looking for is speed into this zone, divergence, or both. Okay, something like that. Whether or not we get it, anyone's guess. And then raging market, but yeah, just freezing everyone out, right? Not giving anyone a chance to board the train. Absolutely fine. No FOMO. We still have to stay systematic to some degree. You know, the most I ever really bend things is probably looking at XRP, right? Yeah, especially in these sort of market regimes. Not taking a double divergence is already stretching confluence to quite a high degree. So yeah, I don't want to start completely abandoning my rules, right? You have to still have some semblance of responsibility about you. Okay, so maybe something like this works, right? It's a sensible area. All right, nice independent low to set an alert at, looking for an SFP or sweep trade. Okay, so got a few tickers to look at from you guys. Let me just have a look. Do you ever think of setting triggers a bit above the point of interest swing low for SFP? No, absolutely not. No. I wait for confirmation. I wait to see what I need to see in the markets. Taking, like I say, speed triggers, divergence triggers, or both. Usually divergence triggers, to be honest. I'm taking that divergence confirmation candle. If you want to know how to sort of go about those executions, I have a masterclass on RSI and divergences a few videos back. I also have a divergences, purely divergences video in the Ultimate Trading course you can check out as well. All right, so random music generator, useless. Not much to chart in the local area here. You can see that the move was made off the back of a solid double divergence on the 4-hour. Okay. Here. And here. Okay, so very, very clean and clear signals. The RSI flat bottomed, but a very, very nice arc structure here. Okay. Didn't go too close to the resets up by the 45 to 55 level here on the mid, and the AO very, very clean, diverging, pretty severe diverging structure here against the lower lows that were printed on price. Okay. All right, one from Mauritian, but take it from the daily down. Okay, so yeah, first thing that draws the eye. Any guesses, guys? Hint, it's in the oscillators. Anything you guys can see? RSI 50 bounce. Yeah, you got it. RSI reset. Nice one to you all. Exactly. It's an exact reset to the 50 level on the daily. Okay, very strong signal as long as this holds. All right, good for a strong push higher on BER. And to be honest, I don't even need to chart anything on any lower time frames. This would be the most significant thing across all time frames. I know that without looking at anything else. Right, these signals are very, very powerful. As long as this holds, we don't lose the mid on the RSI. That's an exact tap, an exact bounce, and exactly what we want to see in strong markets. Can you do TA on dog in me? What is dog in me, Lise? It sounds like an absolute shitcoin. Coinbase? Fair enough. Fair enough. Yeah, bleak. Pretty bleak. Hope you're not a spot holder. Not looking great. Right, there's not really anything to chart here. This looks like 90% of the charts out there. Right, just scroll through the majority of the markets. Okay. Most of them are sort of bleeding down at the lows, right? Like so. And to be honest, these at the moment are just graveyard coins. I don't want to get involved in anything like this. Right? These are just bleeding out until proven otherwise. You know, we are generally in a bull market, although it may not feel like it. We are. Right? If you look at the leaders and the higher caps, the highest caps anyway, we are in a bull market. Okay. So I want to take longs, but I only want to take longs into strong markets, right? Hence why I have this weekly strength watch list. So I can play into the stronger markets and not focus on stuff here that either is going to keep bleeding down or just not do anything for a significant amount of time. And I don't want to be interested in those positions. I want to be actioning my trades in a manner where I can realize good R in as short a time as possible. Okay. Now that's speaking from a swing trader, so I'm not talking about hours, I'm talking about days or weeks. But I don't want to interact with markets and start doing business on charts like this. Dogging me as a chart on crypto, more history. Yeah, that's fine. This is all I need to see, to be honest. This is still lots of data here. Okay. All right, guys. Well, listen. It's been lovely catching up with you all. I hope you have a nice Sunday. Right, lots of family time, friend time, taking some good time away from the markets, touching grass, and I'll either see you on socials or I'll see you in my group. Okay. Take care, and as always, happy trading.